Hello traders, and welcome back to xm.com. You are watching the weekly technical outlook video, and this week's calendar includes key events that might be important in terms of market volatility. The ECB will announce its rate decision on Wednesday. UK GDP and employment data will be out on Tuesday and Wednesday, while US inflation data could be also another important data set to keep a close eye on Wednesday. So that makes euro dollar, pound dollar, and dollar yen important to discuss at this video. And starting first with euro dollar in the ECB policy meeting, investors expect the central bank to keep interest rates steady this month. Well, I would rule out a rate hike given that inflation is still well above the central bank's 2% target, but overall I don't think that the central bank could resume a hawkish forward guidance given given all the weakness, economic weakness according to GDP data. So we also had disappointing PMI readings out of the Eurozone recently, so I don't think the central bank will could send strong signals for additional rate hikes in the coming months. So that could, let's say, a surprise rate hike could boost euro dollar, but overall, if forward guidance remains dovish, that could limit gains in this market. Potentially the 1.08 constraining zone, where the 61.8% Fibonacci tracement of this uptrend over here, as well as the 220-day exponential moving averages are located, could block the way up to the 1.0877 region, where this upper boundary of the bearish channel is placed. Slightly higher than that, the 50% Fibonacci mark of 1.0895 could be another barrier. Perhaps we need close above that bar in order to continue up to the 38.2% Fibonacci of 1.0985. And then if upside pressures persist from here, I expect an acceleration up to this broken support trend line coming from September 2022 lows that is seen at 1.11 at the moment. Well, from technical perspective, a rebound is likely. We can see that the RSI and the stochastics are trying to rebound near their oversold levels. But if downside pressures persist, I would look for a break below the 78.6% Fibonacci mark of 1.0677. If we fall below that territory and exit the bearish channel on the downside, some consolidation could emerge around the 1.0634 low from May 2023, break of which could then take the price down to 1.0535 support region seen at the start of this year. Now turning to pound dollar and UK data. The UK is expected to release mixed reports this week. We expect a quarterly slight increase in GDP numbers, but on a monthly and yearly terms, the economy is expected to slow down a bit. The UK employment report could show a continuous increase in the unemployment rate. That would be the third consecutive increase in the unemployment rate. So overall, although the UK economy seems to be performing relatively better than the Eurozone, there are some signs of weakness in the economy. So basically, futures markets are currently expecting a rate hike, but overall, the central bank could maintain some caution. So this week's data could provide some extra details about what the Bank of England might decide late next week, but it may not boost sentiment for pound dollar. So that suggests that that makes interesting to watch whether pound dollar will manage to rise above 1.2625. That's where the 38.2% Fibonacci tracement of this uptrend is located, as well as this resistance trend line from 15-month highs and the 20-day moving average are placed. If we break that territory, then the next obstacle could emerge around 1.2760 and near the 50-day moving average. The 23.6% Fibonacci mark of 1.2820 has been also a key barrier recently, so we need we may need another bullish action here before we reach this broken support trend line coming from October 2022, currently seen at 1.2950. And well, from a technical perspective, I would rule out a positive correction because the RSI and the stochastic oscillators are looking for a rebound near their oversold levels. But for selling pressure to strengthen, the price will need to drop below the 200-day moving average. That's around 1.2420. If that happens, if the price reverses lower instead and falls below that line, we may see a continuous decline towards the 61.8% Fibonacci of 1.2310. This is where the price rebounded back in May, so it makes it important to watch, while below that 1.2185 region, as well as the 78.6% Fibonacci number of 1.21 could also attract attention. Finally, looking at dollar yen and US inflation numbers. US inflation is expected to extend July's pickup. That could be positive for the US dollar, but that might be driven by the increase in oil prices, which the Fed might not rush to judge, because it may take some time to assess inflation pressures and see whether that increase in oil prices is temporary. So if the core measure, for example, remains near recent lows, that could an upside correction in the headline CPI inflation could bring only temporary gains. And in this case, I expect the pair to retest its 147.70 ceiling, where it peaked last week. This is where the price peaked back in 1998 as well. So any move higher from here could motivate additional buying, likely driving us up to this resistance line over here, which is currently seen within the 149.55 region. Above that, I expect an acceleration up to this deeper resistance line, currently seen around 151. The RSI and the stochastic oscillators have turned lower, so from a technical perspective, market sentiment could remain downbeat, but selling pressures could emerge, could strengthen only if the pair closes below this bullish channel and below the 20-day moving average that is at 146.20 at the moment. If this pullback extends clearly below that area, the price may pause around 144.60 as it did back at the start of this month, while lower than that it may seek support around 143.60 and near the 50-day moving average before stretching down to meet this support trend line at 141. So that's all for this week's weekly technical outlook video. Thank you for watching, and see you next week. Bye bye.